XRP is a digital asset created by Ripple Labs. It's designed for fast and low-cost international payments, and honestly, a lot of people keep a close eye on its price. But it's not just speculators. There are plenty of folks out there who really believe in the technology. The core idea behind XRP is to improve the global financial system. Traditional systems like SWIFT are slow and expensive. They can take days to settle transactions between banks. XRP aims to solve this problem by offering a bridge currency, which lets financial institutions move money across borders in just a few seconds. This makes it a pretty unique player in the whole cryptocurrency space. The community around XRP is strong and, well, pretty vocal. Supporters, often called the XRP Army, really believe in its long-term potential. They see it as more than just another cryptocurrency. For them, XRP represents a fundamental shift in how money will move in the future. They follow every piece of news, from Ripple's legal battles to its new partnerships. This intense focus from the community contributes a lot to its market activity. Their constant engagement keeps XRP in the spotlight, even when its price action isn't as dramatic as some other assets. The belief is that its utility will eventually drive its value much higher than current levels. Unlike a bunch of other digital assets, XRP wasn't created to be a store of value like Bitcoin. Its primary purpose is utility. It serves as a tool for financial institutions. This distinction is really important for understanding its price movements. While Bitcoin is often compared to digital gold, XRP is more like a digital lubricant for the financial industry. It's meant to be used, not just held. This focus on a real-world use case attracts a lot of investors looking for assets with tangible applications beyond just speculation. Its design prioritizes speed and efficiency above all else. So when we talk about the price of XRP, we're talking about more than just market sentiment. We're evaluating the progress of its adoption by the banking and payments industry. The price is a reflection of the market's confidence in Ripple's ability to achieve its goals. Will major banks integrate XRP into their systems? Will regulators provide a clear framework for its use? These are the big questions long-term holders are asking. The answers to these questions will ultimately determine whether XRP fulfills its promise and reaches the ambitious price target set by its supporters. In the immediate future, over the next few days, XRP's price is expected to remain highly volatile. Short-term predictions point to a tight trading range, likely between 55 and 65 cents. This range is defined by technical support and resistance levels. A break below the lower end could signal further downside, potentially testing the 50-cent mark. Conversely, a push above the upper boundary might spark a small rally towards 70 cents. Traders should be prepared for sharp, sudden movements. News headlines or broader market shifts could easily trigger these price swings with very little warning, making short-term trades particularly risky. Looking ahead to the next few months, the picture for XRP gets a bit more complicated. There are really two main scenarios on the table. The bullish scenario involves a positive resolution to Ripple's ongoing legal case with the U.S. Securities and Exchange Commission. A favorable outcome could remove a massive cloud of uncertainty that has held the price down for years. This, combined with new partnerships or progress on an XRP exchange-traded fund, could push the price toward the $1 to $1.50 range. Such a move would be a significant gain and would restore confidence among investors who've been waiting patiently on the sidelines. On the other hand, the bearish scenario presents some pretty big risks. A negative development in the legal case could be catastrophic for the price. If the court rules against Ripple in a significant way, it could lead to a massive sell-off. Investors might lose faith in XRP's long-term viability, pushing the price back down to its previous lows, possibly below 40 cents. Another risk is widespread profit-taking. If the broader crypto market takes a downturn, XRP will likely follow. Investors who bought at lower prices might decide to sell, adding even more downward pressure and stalling any potential upward momentum. So, the medium-term outlook is really a story of two extremes. The outcome depends a lot on external events, not just market mechanics. For investors, this means that holding XRP over the next few months requires a strong tolerance for risk. The potential for big gains is matched by the potential for significant losses. The key will be to watch for clear signals, like a final court ruling or major adoption news. Until then, the price is likely to be caught in a tug-of-war between optimistic bulls and cautious bears, creating a pretty challenging environment for everyone involved. The single most important factor influencing XRP's price is Ripple's legal battle with the SEC. This case has been dragging on for years, and honestly it's created a ceiling on XRP's potential. The core of the dispute is whether XRP should be classified as a security. A definitive win for Ripple would provide regulatory clarity in the United States, which is, one of the world's largest markets. This clarity would likely lead to XRP being relisted on major US exchanges and could open the door for institutional adoption. Conversely, a loss would have some pretty severe negative consequences, potentially limiting its use and tanking its value. Every court filing and judge's ruling causes ripples in the market. Outside the courtroom, new partnerships and real-world adoption are also critical drivers. When Ripple announces a collaboration with a major financial institution or payment provider, it validates XRP's use case. These announcements show that the technology is actually gaining traction in the industry it's meant to serve. News about central bank digital currency projects exploring the XRP ledger also boosts investor confidence. And of course, the prospect of an XRP ETF is a major catalyst. An ETF would make it easier for mainstream investors to get exposure to XRP, potentially bringing a massive inflow of new capital into the asset. When you compare XRP to Bitcoin and Solana, its price action stands out. Bitcoin is the market leader, and its price movements often dictate the overall direction of the crypto market. When Bitcoin rallies, most other coins, including XRP, tend to follow. But XRP's correlation isn't always perfect. Solana, on the other hand, is known for its high-performance blockchain and a strong ecosystem of decentralized applications. Its price is often driven by innovation within its network and the success of its projects. XRP moves differently because its value is tied so closely to specific non-market events like legal news. This sensitivity to news makes XRP more volatile and less predictable than many of its peers. A single headline about the SEC case can cause its price to jump or fall by double-digit percentages in just a few hours, while Bitcoin and Solana might stay relatively stable. This makes XRP a higher-risk, higher-reward asset. Its performance is less about broad market trends and more about the specific progress of Ripple's business and legal strategy. Investors in XRP are really betting on the company's success as much as the technology itself, which isn't quite as pronounced with more decentralized assets. Reaching a price of $5 per XRP is, an ambitious goal. But it's not entirely outside the realm of possibility. For this to happen, a series of significant events would need to align perfectly. The first and most crucial step is a complete and decisive victory for Ripple in its legal case against the SEC. This wouldn't just be a partial win, but a final judgment that removes all regulatory ambiguity in the United States. Such a development would unleash a wave of pent-up demand. Exchanges would rush to relist XRP, and financial institutions that have been watching from the sidelines would finally feel comfortable integrating it into their operations. After a legal victory, the next big catalyst would need to be widespread, tangible adoption. This means moving beyond pilot programs and announcements. We'd need to see major banks and payment networks actively using XRP for cross-border transactions at scale. If a company like American Express or a large international bank were to publicly commit to using XRP for a significant portion of their payment flows, it would offer undeniable proof of its utility. This real-world demand would create sustained buying pressure, fundamentally changing XRP's market dynamics from speculative to utility-driven. An approved XRP ETF would further accelerate this by opening the floodgates for retail and institutional capital. However, the path to $5 is filled with obstacles. The legal case could drag on longer than expected or end with a mixed outcome that doesn't provide the clarity the market wants. Competitors, both in the crypto space and from traditional finance, are also working on their own solutions for faster payments. Plus, the broader macroeconomic environment plays a role. A global recession or a bear market in cryptocurrencies could suppress XRP's price, no matter how well things are going internally. Profit-taking will also be a major hurdle. At every new price level, long-term holders will be tempted to sell. So, in conclusion, while the dream of a $5 XRP is compelling, it remains a long-term aspiration that depends on a perfect storm of positive events. It's not something that's likely to happen in the short or even medium term. The most important factor is still the legal clarity that only a full victory against the SEC can provide. Without that, institutional adoption will remain limited, and the price will struggle to break free from its current constraints. For XRP to soar above $5, it needs to transition from an asset driven by speculation and legal news to one valued for its indispensable role in the global financial system.